I have retirement on my mind, so I am definitely putting in the work to build towards it. Today, I'm going to share my investments into one of my long-term portfolios, $50, into a few ETFs on track to give me higher growth potential. These are ones that I'm pairing with FXAIX, my foundational investment when it comes to my long-term portfolios. Small amounts can build up over time. Don't let your budget hold you back. Get started investing. How I invested that $50 today. $20 into SMH, $15 into VGT, and $15 into SPMO. I also have a few limit orders placed, which you can see here, to add additional to VGT, which is a newer addition to my portfolio. So I want to have that higher growth when it comes to my portfolio right now. My foundation is built out. When it comes to these three investments, they play different roles when it comes to my portfolio. We have momentum, semiconductors, technology as a whole. VGT and SMH have outperformed the S&P 500 for over 15 years now, and SPMO is on track to do the same. This one's been around for about 11 years, so it doesn't have that same track record length of time for us to reflect back on like VGT and SMH. But looking at the average return of these funds over the last 10 years, we can see VGT is at 24.84%, SMH is at 35.04%, and SPMO is at 20.36%. Now let's take a look at my current holdings when it comes to these three funds. SPMO, my momentum ETF, I'm currently up 28.56%. I'm holding 199.8 shares, and it's the largest position at about 30K. It has an expense ratio of 0.13%. Vanguard's Information Tech ETF is the newest addition to this portfolio. I have 5.125 shares, and I'm currently up 2%. And this fund has an expense ratio of 0.09%. And then we have SMH, the VNEC Semiconductor ETF. I'm up 9.71%. I'm holding 9.41 shares. This one has the highest expense ratio at 0.35%, and also the highest share price right now at about $597. But like with anything that I add to my portfolio, I don't concern myself with that share price. I invest based on my budget. And today, SMH got $20. While the other two funds got 15. These are long-term funds that are outpacing the market, and I don't have to be held back from adding whatever quality ETF, mutual funds, or individual stock that suits my needs, that is in line with my current goals. And you don't have to either. Every brokerage that I'm working with, that I have an investment portfolio on, allows me to invest using fractional shares. So if you don't have that going on when it comes to your portfolio, seek it out so that you can get your money invested, building and growing for you. Let's take a look at these funds. SPMO buys the strongest stocks inside of the S&P 500. The ones that are trending upward, capturing those gains for us. It holds 102 different investments, pays out a quarterly dividend, and has been around since 2015. VGT captures the entire tech ecosystem for us. It holds about 327 different companies. It's going to cover software, hardware, cloud, AI, everything for us in this one investment. These are companies expected to grow significantly, double-digit gains as we move towards 2027. That's why a fund like VGT continues to outperform. And then we have SMH. 26 holdings when it comes to this semiconductor ETF. This investment gives you exposure to the backbone of AI when it comes to cloud, robotics, EV, everything. It pays out an annual dividend, and I was willing to pay that higher expense ratio at 0.35% for this one because the performance justifies it. Looking at the returns of these three funds over the last 10 years, SMH is up about 1,900%. VGT is up 818, and SPMO is up about 535%. So these are funds that I'm pairing with my foundational ETFs and index funds like FXAIX, the Fidelity 500 index fund. It's one of my long-term core positions. It's stable, diversified, has an even lower expense ratio than any of these other funds at 0.015%, but I'm set when it comes to investing into this one. Now, I'm working on my growth layers. So I have a few shares, just 16 in that same portfolio with VGT, SMH, and SPMO, and I'm up 25.50% here. And then this is my main position when it comes to FXAIX. I have 753 shares and I'm up almost 70%. So I built some positions here that give me exposure to the strongest sectors, diversification, as well as stability, higher concentration into some funds beyond the S&P 500, things that I felt that my portfolio could get a boost from after I felt solid with the foundational stage. So don't be overwhelmed with building your portfolio, especially when it comes to your retirement accounts. You can adjust and rebalance if you need to. You can choose some low-cost ETFs or mutual funds that give you exposure to the S&P 500 or total U.S. stock market. And then if you want to layer in some more investments that fit your goals, right fit when it came to building up my portfolio, ask yourself some questions. Is your overall portfolio in line or beating the S&P 500? Does every investment that you're holding have a clear purpose? Is it still the right fit for your long-term plan, the way it was when you added it into your portfolio? And then from there, just keep on buying, be consistent, build up your position, your share size. I do it at Fidelity for my long-term accounts, but I also have taxable brokerage accounts that I'm building up on platforms like MooMoo that I can tap into whenever I'm ready. Check out my referral link for the MooMoo Investing app. It'll be in the description and pinned in the comments. If you have a small budget, don't let that hold you back. I invested $50 today, but the brokers I use allow me to invest $1 to $5 at a minimum. So I could have invested an even lower amount if I wanted to. I just want you to know that you don't need hundreds or thousands to get started on your wealth building journey. To start to bring your kids on this journey with you, you need consistency. Set the amount that works for you and then just keep on building. And so I'm going to be buying and holding onto these high growth ETFs that have a proven track record to recover and continue to grow over time. All I have to do is wait and let that compounding effect take place. I'm building long-term positions here that I can hold on to for decades. This is a part of my long-term plan. Share yours in the comments. What type of investments are you incorporating? Are you holding on to for 10 years plus when it comes to your portfolio? And let me know what ETF or stock you'd like me to share about next. I'm Lisa J. Stocks. If you're not already, subscribe to the channel. Give this video a thumbs up. Hype. Turn on that notification bell. Come back and continue to support the channel. Thanks for watching. Okay, bye.